going to go for chapter 4, completing the accounting cycle, as a continuation to our videos for explaining the financial and managerial accounting for Horngrens. Actually, in chapter 1, 2, and 3, we moved through the accounting cycle until we reach now the main purpose of the financial accounting, which is the preparation of the financial statements. Actually, we talked in general term, but actually here we are going to talk about the financial statement into more details. As we discussed before, we have mainly 3 financial statements, but actually in real life we are preparing 5 financial statements for the real companies. If you are looking through the financial statement of any company, especially in Egypt, you will find that we are required to prepare 5 financial statements. But actually here, because this is a course for beginners, we are going to discuss the main 3 financial statements, which are the income statement, statement of retained earning, and the balance sheet. As we explained before, income statement are reporting revenue, expenses, and calculating net income or net loss for the period, because actually we said the income statement will including revenue minus expenses. And if the revenue is exceeding the expenses, so it is net income. If the opposites happen, which means that expenses is exceeding revenue, so actually we'll have a net loss. The statement of retained earning, and it shows how retained earning changed during the period, because actually we are starting by the beginning balances, seeing what are the main change happened during the year, in order to, of course, by increase or by decrease, to reach for the end balance of the retained earning. And we said that the retained earning is the accounts that include all the profits that have been accumulated, or losses of course, that have been accumulated since the company started its operations. And at the end, the balance sheet, and the balance sheet or the financial statement position are reporting assets, liability, and equity at the date of the financial at the date of the end of the year, which is normally December 31st. But actually all the other incomes, the income statement and the statement of retained earning, are showing the result of operation that happened for one whole year, or for the accounting for. This is the main shape, if you remember, for the adjusted trial balance. Actually, we said that we are, after we posted all the transaction into the T accounts, and we did the adjustment last time in chapter 3, we reached for the adjusted trial balance, and we said that we are listing all the balance sheet accounts first. Assets, all of those are assets. Liabilities, and equity, of course, here. Okay, so actually this is the balance sheet items, as you can see here. Then we have the statement of retained earnings accounts, because actually we are taking the dividends, the service revenue, okay, and he's saying here dividend. And then we have the income statement, which include revenues and expenses, So actually in the preparation we move from down to top. Income statement including revenue, expenses, statement of retained earning, because actually we are taking the result of the income statement to be reflected on the retained earning, and then we are going to report that in the balance sheet. Go and see what are the relations among the financial statements. The financial statements relate to each other, which means the net income, as we just said, or net loss from the income statement, flow to the statement of retained earning. Ending retained earning from the statement of retained earning flow to the balance sheet. Actually here we extracted these numbers from the adjusted trial balance. As you can see here, we have service revenue and then expenses. Okay, and we deducted the expenses from the service revenue, which is income Okay, and this income will flow to the here we started by the retained earning beginning balance, okay, 0, and net income for the 2 months, and then we subtract dividend, which is the distribution of profit, and we reach for the retained earning December 31, 3,550, and this will move to the balance. Here, all of those are the assets as we discussed before, and all of these are the liabilities, and then the common stock, and then the only number that will be affected from the income statement is the retained earning. As you can see here, this number is coming from the retained earning statement, and then we have the total assets here equal to the total liabilities and shareholders equity. Another additional information that we are in need for is how to prepare a classified balance sheet. Classified balance sheet, which means we are going to classify the assets and liability into specific categories. Of course, up to this point, we used to list the assets as it is. But actually, starting from now, and because we almost finishing the accounting cycle, we need to know that the assets are shown in order of liquidity, and that the liabilities are classified at current, which is due within 1 year, or long term due after 1 year. And always, whenever we are talking about liquidity, we are talking about how quickly and easily an account can be converted into cash. The more the assets, the more quick the assets can be transferred into cash, this is to be called a short term or current. And the longer the period will be, okay, this will be called long term. The current assets, they are assets to be converted into cash or used within 12 months or within the operating cycle, whichever is longer time. What is the operating cycle? Operating cycle is the time span during which cash is paid for goods and services which are then sold to customers from whom the businesses collect cash. Yeah, the operating cycle is starting from day that you purchase the raw material or the product or whatever that you according to your activity in the company, and then you are going to produce or sell these products to customers, and then to collect this money this amount of money. Though this period called operating, from the acquisition of the inventory of the product or the inventory or the merchandise, selling them and then collecting them. This is current assets. Long-term assets not converted into cash or used within operating cycle or 1 year, which means it will exceed that period. The collection or the conversion of that asset into cash will exceed that period. So long-term assets not converted to cash or used up within the operating cycle, like the long-term investment, plant assets, and intangible assets. Any assets that will last for more than 1 year. Liabilities. Also, liabilities will be classified into current liability and long-term liability. The current liability is a liability that must be paid either with cash or with goods and services within 1 year or within the entity operating cycle, like accounts payable, salaries payable, unearned revenue. Actually, if you are going to pay this liability within 1 year or operating cycle, it will be considered as the current, short term. But if it's going to take more than 1 year, okay, or more than the operating cycle, so in that case I will going to say that this is a long-term liability. Long-term liability. The current liability are liability to be paid within 1 year or less. The long-term liabilities are liabilities to be paid within or more than 1 year or operating Stockholders equity. The stockholders equity represents the claim to the assets of the business. This is the investment that have been made, the capital that have been contributed by the shareholders. And actually it reflects the stockholders contribution through common stock. The common stock are the shares that the company are giving the shareholders, the owners, to prove their right in the capital of the company. And it represents the amount of assets left over after corporation has paid its liability according to the assets equation. Assets equation is telling me, the accounting equation is telling me that assets equal liability plus equity. If I'm going to rearrange by moving liability to that side, I will say assets minus liabilities equal equity. Assets minus liabilities equal equity. This means that the equity will be the residual value after asset covering all the liabilities. Actually, here we made or remade the balance sheet according to the classification that we just explained. Here we started by the current assets, as you can see, and we included cash, account receivable, office supply, prepaid rent, and we got a subtotal here, total current assets. And then we started to mention or report the non-current, the plant assets, like furniture, decreasing the accumulated depreciation, buildings, accumulated depreciation, land, and this is the total plant assets, and the addition of both will yield the total assets. Okay, يبقى actually here this classified balance sheet only include two asset categories, current and plant assets, that could be included in the company's assets sections are long-term investment and intangible assets. But this company, the company that we started with from chapter 1, okay, does not have this kind of other assets, but we can that the two main sections here are current and non-current assets. On the other hand, liabilities also have been classified into current liability, including accounts payable, utilities payable, salaries payable, interest payable, unearned revenue, and total current liability. And then the long-term liability, notes payable, and this is the total liabilities. And then the stockholders equity, the common stock, retained earning, total stockholders equity, and the total liability and stockholders by, of course, adding these two numbers. At the end, the total liability and equity must equal, as usual, the total asset. Use the worksheet to prepare financial statement. What is the worksheet? Worksheet is a sheet that we can use all what we did in the accounting cycle in order to be reflected directly on the financial statement. How could a worksheet help in preparing financial statement? The first four sections of the worksheet, as we are going to see now, help to determine the adjusted trial balance. We are including income statement, including balance sheet items, and to determine the net income or the net loss type. Let's see. To understand, the worksheet is a sheet, as you can see here. We are listing the unadjusted trial balance. If we have any adjustments, we are going to do it, and then we will have the adjusted trial balance. Yani, for example, cash is never to be adjusted according to what did we explain in chapter 3. So 12,200 debit, nothing have been adjusted. The new adjusted will be 12,200. The account receivable is 1,000. It has been adjusted by 800, so the new total is 1,800. Office supplies 500 in the debit, it have been used by 400, so the balance is 100. So actually the adjusted trial balance that we explained and illustrated at the beginning of that chapter, okay, have came through taking the unadjusted trial balance, adjusted, and then we will have the adjusted trial balance. Section 5 and 6 will include income statement and balance sheet. Income statement will include only revenues and expenses, as you can see here, in order to find out the net income, and the other items will go for the balance sheet, all the assets, the accumulated depreciation, for example, land, utilities, payable, liabilities, and then we have the common stock and the net income. Okay, because it is net income, it will be transferred here. Okay, so actually it will be added to the credit side because this is the side of the retained earning and equity, and then all the balances at the end must be equal, as you can see. So this worksheet can be done, of course, by a computer or a software like Excel, and it can be done manually, but actually this is a matter that is related to the company itself to do it manually or through computer. Now moving to the learning objective number 3, which is to explain the purpose of journalize and posting of closing or the closing entry. In accounting, we have two main categories of accounts. We have something we call temporary accounts or nominal accounts, and we have permanent account. The temporary accounts, okay, are revenues, expenses, and dividend, and the permanent accounts are assets, liability, and equity. The closing process is to be exercised over the temporary accounts. Temporary accounts mean the balances of this account must be equal to 0 at the end of the year. Why? Because every year must include its own revenue, its own expenses, and its own dividend in order to be able to evaluate the performance of the company for each period separately from the other period. Which means if we have revenue that is 100,000, I have to make sure that this 100,000 is related to the current period, and it does not include any income or revenue from the previous year type. But actually, we already have T account from the previous years, including revenue. This is why we have to close this nominal account. We have to close the revenue. We have to close the expense. We have to close the dividend. Okay, closing means to make these accounts equal to 0, and where the items or the amounts inside the revenue will go to, it will go to the retained earning, But for the permanent accounts, the balances will be transferred from one year to another. Yani I have cash at December 31st, 2019 with 100,000. I will start 1st of January 2020 with this 100,000. So this means that the same for liabilities, the same for equity. This means that these accounts will be moving from one period to another with their balances. And this is a permanent account. The permanent accounts are accounts that their balances to be transferred from one period to another. This is why we are saying that the closing process zeroes out all revenue expense account in order to measure each period net income separately from the other. The closing entry transfer revenue, expenses, dividend to the retained earning. And revenue and expenses may be transferred first to an account titled income summary. This is another issue, and then income summary can summarize the net income for the period into the retained earning. Yani for example, here we know that the normal balance for expenses is debit. So in order to close it, yani if I have 1,000 here expense and I would like to close it, I will credit it with 1,000 in order to make it equal to 0. Okay, and then this will go to the income summary. So now the debit balance of the income summary is equal to the expenses. On the other hand, revenue has a credit nature. So in order to close it, I have مثلا 1,500. So in order to close it, I will credit it with 1,500 in order to make the balance equal 0. Because if you remember from chapter 2 that whenever we are finding the balance, we are summing or adding the two sides and then to get the difference, and this will be transferred to the income summary here. So now the income summary including the revenue in the credit side and the expenses in the debit side. If the balance of the net income is in the credit side, so revenue is exceeding expenses, it is net income. If it is debit balance, which means expenses exceeding revenue, so it is net loss type. In all cases, this will be transferred to the retained earning. Yani if I'm assuming that we have net income here in the credit side, which is 500, because this is 1000 and this is 1500. This 500 will be credited in order to close the income summary to make it 0, and it will be transferred to the retained earnings. So the retained earning will start by beginning balance, increasing by net income. Okay, type. And the other hand بقى dividend, which has a debit balance, it will be closed in the retained earning. If I have 200 dividend, so actually I will credit it as you can see here. So the balance will be 0 as we just said. Okay, and actually here this 200 will be here as dividend, and this is 500. So the net effect on the retained earning is 300. So now, as if we are doing the retained earning statement, starting by the beginning balance, adding the net income, decreasing the dividend. So actually this is the end. Do that in entries. Actually, whenever we would like to close revenue, we have 17,500 credit, we would like to close it, so I'm going to debit service revenue for 17,500 and income summary for 17,500, and as we just. Okay, the other, the second entry for closing expenses, all the expenses having a debit balance. So actually all the balances of the expenses will be credited with their amount individually. We cannot get them as a total amount. I'm going to add all of that, okay, and the total will be debited for the income summary in order to close. So all of these expenses will be 0, and that amount have been transferred to summary. So now the income summary have debit 70, has a credit balance, the revenue 17,500, and they have expenses of 8,950. So actually now we have a balance of 8,550, which is the net income type. So actually this will be credited, so will be debited, as you can see, income summary, and this will go for the retained earning. Will go for the retained. Yes, this is how it will be journalized in order to appear in the T account as we expect. The last thing is to close the dividend, and as we said, dividend is 5,000 debits. So in order to close it, I will credit it for 5,000. So I'm going to debit retained earning and the crediting dividend. And at the end, this is a summary of the 4 entries that we made: the service revenue, income summary and all expenses, income summary, retained earning, and then retained earning and dividend. And by that, the only is the items that is not included in the income statement. Right. This example or this slide is showing if we have losses, as I explained before. The only thing that will differ that the balance here will be debit because the expenses is higher than the revenue. So the entry will be reversed, retained earning will decrease, and income summary will be closed. Let's go for the post, the last thing to be done, the post closing trial balance. Closing trial balance. A list of all the account and their balances at the end of the period after journalizing and posting the closing entry. Include only permanent account. Why include only permanent? Because actually you closed all the temporary account. What are the temporary accounts? Revenue, expenses, and dividend. We only have the permanent account. If you scan this adjusted or this post-closing trial balance with me, you will not find any revenue, nor expenses, nor dividend. We have only assets, liabilities, and equity. And we have the equity after we close the retained earning. Balance is after we closed revenue, expenses, and dividend. As if we summarized all of that and we included inside the retained thing that I would like to. What did we explain during the whole 4 chapters? Because actually this chapter was the closing of the accounting cycle, or the last thing to be done in the accounting cycle. If you remember, we used to make something like a journal entry. We are starting by the balances. we analyze and journalize the transaction, then posting unadjusted trial balance, and then we are doing the adjustments in order to reach for the worksheet, adjusting entries, journalizing and posting the adjusting entry to reach for the adjusted trial balance, and then we are doing the financial statement, then closing entries and posting our post closing the trial balance. So actually we have almost 10 steps to start with or to follow in order to reach for the financial statement and to end the fiscal year or the financial year. Then we move to the step 1 again from at the beginning of the new year, and this was the end of the accounting cycle. Thank you for listening. See you in the next chapter soon, inshallah.